What's up, everybody? Today I want to talk to you about real estate as an investment strategy because real estate is considered one of the most reliable ways to generate wealth. Now, there are several ways that you can invest in the real estate industry. Whether you're a seasoned investor or you're just starting out, these investment decisions can be overwhelming. So we're going to talk about 15, some common, some really weird ways that you can invest in real estate. And so this video aims to explain what we think are some of the best strategies or some of the most interesting strategies that you can employ to invest in real estate. These strategies will absolutely help you understand and have a better idea of how you can invest your hard-earned money in the real estate market and make some money back out of it. And now we believe, and by we I mean I and the guy who helped me write this guest post, that one or more of these strategies will absolutely help you figure out your starting point and how you can go ahead and get a jump on buying real estate without making too many mistakes. So I hope that this video will pave the way for you in your world of real estate investing. So what are we waiting for? Let's get started. Also, I normally wear like polos and stuff. It's kind of weird to have the mic up here, but I wanted to show off the new shirt. So if you want some merch, check out the shop. But before you can start thinking about investing in real estate, you need to figure out what your goals are and what kind of strategies you're going to use. What tactics will you be employing? And yeah, that's right. There's a lot of difference between the three, right? So strategies, goals, tactics. You must know about all of them. Now, think of real estate investing and wealth generation as kind of climbing a mountain. So that makes you the adventurous mountain climber, right? And the peak of the mountain represents all of your financial goals and life goals. And for that matter, to reach the top, you have to be able to achieve several different milestones along the way. Now, the next part of this is the strategies, and strategies are your plans and the roadmaps and how you're going to what you're going to use to get up that mountain, right, to your goals. And this helps you climb the mountain itself. Now, in mountain climbing, maps are very important as they guide you to reaching the top in the fastest, most efficient way without getting hurt. Now, similarly, without a strategy, you can't achieve your goals and milestones. Finally, there are the tactics and tools like brochures, ropes, ladders that help you climb the mountain's rough terrain. You're going to find plenty of articles on the internet on this topic, but so many real estate investors tend to just get so focused on the tactics, like the tools, that they forget about the bigger picture, the goals, and outlaying their strategy, and they just go after whatever they think is going to work for the time. So real estate investors dive into this subject without realizing what strategy they want to employ, and then they overwhelm themselves with unnecessary information that is just detrimental to their cause. Getting better at the tactics side without having any idea what strategy you're going to use is similar to driving on a dark road without any idea where you're going. When you're trying to learn about real estate investing, you must understand everything you can about the strategies that you'll use before you do anything else. And so we're going to dig through and just kind of tell you exactly some of these different strategies. That some of these are common, some of these are unique, and this is by no means an all-inclusive list, but these are just 15 interesting strategies that I think you should know about. All right, these strategies are fix and flip, wholesaling, house hacking, live-in then rent, live-in flip, burr investing, short-term buy and hold, long-term buy and hold, debt snowballs, cash plans, trade-up plans, hard money lending, discounted notes, syndications, and real estate investment trusts. Now, there's a whole bunch of other stuff, but these are kind of what we're going to cover, and I'm just going to give a super wave top overview, and then whichever one you guys comment down below the most about, I'll go into detail on. Now, the first is fix and flip. This is one of the oldest models of investing in real estate, and the gist of it is just that you buy a property that's not in the best condition, you revamp it, you sell it for a higher profit, which sounds easy, but it's not, actually. It requires a lot of effort and a lot of your time and money. You can use this strategy if you're planning to go all in on this line of work, because you take up a project that you might as well say goodbye to your day job if you're doing it yourself, right? So this strategy's biggest benefit is the large influx of cash that you make for all the effort and hardships and late night planning and your budget and everything else. But it takes a lot of time. And so after seeing your house's final completed form, you're filled with a sense of achievement, and that's hard to come by your daily life. So there's a lot of good things about flipping, but just know it involves a lot of work or outsourcing. 2 is wholesaling, which is either going to be your favorite or you'll not be interested in it at all. Now, if you like sales and you're fond of negotiating deals, then this strategy might be for you. If not, then maybe not, right? Like you might just not enjoy it at all. Wholesaling is buying a property at a wholesale rate and then selling it quickly for a little profit. It's equivalent to a full-time job when you spend your days either hunting for cheap properties that you can buy or looking for potential clients who will then buy your property off your hands at a higher rate. But the plus side of the strategy is that you'll be able to create a lot of connections in the real estate world, and you'll polish your marketing and negotiation skills, which will come in handy in your future endeavor. Number 3 here is house hacking, which is a great way to begin your career in real estate. In fact, it's my favorite because you're not gonna, if as a new person, you probably don't have a ton of cash. And so there's primary mortgages, like primary residence mortgages, you can use like the VA loan that will help you get into a property for little down. You get to learn how to be a landlord, you get to learn how to be a property manager, you get to learn how to buy property. It's not as scary, and it's just overall, it's a great way to get in. And because you're house hacking and you're saving a lot of money on your living expenses, you're then able to turn around and take those living expenses that you would have been spending and saving or spending, whatever, and reinvest them into future deals. So there's a lot of benefits to house hacking, which I really like. Number 4 here is the live in then rent, which is an offshoot of house hacking in some ways. It's just renting your place out once you've paid the mortgage. So, in essence, your home acts as an investment for you, and you don't have to share your living space with someone else. So like this would be like once you move out of the house hack, now you're renting that space out and you're on to the next one. It's a great way to get your portfolio going since you don't have to live with your tenants, and you also have an easier time keeping your relationship with the tenants that you do have. It's just a second piece to that house hacking, right? Like instead of selling the house, you can just rent it out once you move out. And then there's the live-in flip. Just as the name suggests, the strategy advises you to buy a home, move in, fix it up, and then sell it after you live in it for a few years. It's a great way to earn your profits through real estate investing, as you can get a lot of the same benefits for flipping a house while also not having to pay as much in taxes as long as you live in the house for 2 cumulative years out of the last 5 or 15 if you're active duty military. And so the live-in flip will help you accumulate thousands of dollars in profit in the early days of your career, which is capital that will prove crucial in your progression in the world of real estate. Now, burr investing, which is buy, rehab, rent, refinance, repeat, is just a different strategy. So if carried out correctly, this investment strategy is an excellent way to build your rental portfolio without emptying your bank account. In the early stages of your investment career, basically, burr is where you buy a house, you fix it up, and you rent it out, and then you can refinance, pull your money back, and do it again. So if you're looking out for these properties which require some maintenance, and then you can, on your end, you can fix them up and you rent them out, it's a great strategy because it does take time to save up all that money to do the first one, but you can reinvest those same dollars to buy multiple properties, which can actually expedite your wealth building. All right, number 7 is short-term buy and hold rentals. So this strategy means buying and holding a property for a duration of 1 to 5 years, capitalizing off appreciation. Basically, like this is short-term rentals like Airbnb. This can be short-term rentals where you're leasing for short-term, or this can just mean that instead of holding forever, you're buying at the bottom of a market, trying to catch up on that appreciation, or in a market that's booming, and then you plan to sell it in like 5 or 10 years to capture the capital gains, make some profit. So it's like a longer than a flip, but you're still making some money in there. And then the next one is the long-term version of this, which is what I like, where you just hold it basically forever, and the property goes up in value, the rent goes up in value, and you're making money off it, while simultaneously you're getting to keep the money off it, which is great, but your tenants are also paying down the property, and you're getting all the other benefits. And then once the mortgage is gone, your cash flow just skyrockets. And then there's rental debt snowball. This is a modern, unique way to build your wealth, decrease risk, and eventually generate an income stream for your rental properties. This basically means that you're concentrating all of your rent on other revenue streams into paying the mortgage, one property at a time, right? So this way you can quickly pay off your mortgage and act towards your retirement plan sooner than you had hoped. So you're taking all of your rental properties and paying off one property, then using that cash and just slowly paying off one property at a time, or quickly. And then there's the all cash rental plan. So if you like the debt snowball, this just means that you're buying houses in cash instead of with a mortgage. Not a huge fan of this. I think you can do very well with leverage, especially with how cheap debt is at this moment. I think it's very beneficial to just pay that down. But there is something to be said for not having the risk of a mortgage in case the market goes down. So sometimes buying in cash is smart. Then there's the trade-up plan, which is perfect for multitaskers out there and people who want to go bigger. Trade-up is ideal for investors looking to climb the ladder. So instead of holding a property forever, you'll hold it for a little while, and then once the property goes up in value enough, you can sell it with like a 1031, and you can take those tax deferred gains and roll them into a bigger property. And so you're basically just climbing this ladder of taking a single family, and then maybe you sell it for a duplex, and then a fourplex, and then an 8 unit, and so on and so forth, until one day you have a big apartment complex. And it all started with that one property at the beginning. And now there's also hard money lending, which is a strategy that's ideal for investors looking to invest their money without doing a lot of work. These loans are given out on a short-term basis, and they're perfect for those investors who buy and flip properties. This is generally a way that you could lend money to other investors, and you can get high interest for it as long as you know what you're lending on and you know how to mitigate your risk. And so you're not actually buying the houses this time, but you're lending money to people at a high interest rate and therefore building your wealth. And then there's discounted note investing, which is basically acting as a bank. And so you're lending on a property not as fast as hard money, but more as a mortgage, and it's just generating consistent cash flow based on the amount of money that you bought into it. And there's a lot of ways to do this, but don't get super wrapped up around it, but just know that note investing is useful. And then there's syndications and crowdfunding, and the syndications are when a bunch of people pool their money together to buy a big investment like an apartment complex, like the 146 unit that we bought back in March. And then your money will, double over time or however the returns are, but you're also getting to benefit from some of those tax benefits, and you're getting into a much larger asset than you would have been able to get into if you were buying single family homes on your own. And then the last one I want to touch on briefly is real estate investment trust. This is kind of like crowdfunding, except you're basically investing in a fund that buys properties. I'm not a huge fan of this, but if you don't have a ton of capital, it's a good way to put $1,000 into a real estate investment trust rather than having to wait till you have $20,000 or putting it directly in the stock market. Basically, REITs are a way to invest kind of like the stock market, but into real estate. So investment trust, you can take your capital out of the arrangement by selling your portion of the pie to your partners, and you don't have to hold on to it forever, right? Now, these are 15 ways that are just different strategies, and I know this is not all of them, and I know some of these are not ideal, or they're just kind of wacko, or maybe they're just you're like, oh, well, long-term buy and hold and short-term buy and hold is the same as rental. I got it. Look, I polled some people, and I was like, hey, what are some unique strategies people should know about? This is the list I got, so I wanted to relay it to you. These are some interesting strategies. Let me know in the comments what your favorite are, and let me know in the comments which ones I missed. And then if you want me to go really in detail on some of these, like flipping a house or whatever, let me know, and I would be more than happy to give a full breakdown of that. Also, subscribe to the channel, motherfucker.